Okay, so we've been talking a lot about how to trade reversals, and yesterday was the downtrend that reversed, but in this case we were able to take an uptrend reversal here, selling here, and covering down there. The actual trade should have been to hold that to here, but because of this reversal and this failed initiative candle and the fact that I threw on 8 contracts, I just took off down here. So that's where I took it to. When you see in retrospect that the market went way further beyond, then there's the fear of missing out or whatever. Oftentimes it's good just to take that trade, but we can see that as the market here has pushed off of what is a swing high range overshoot return type trade, that the market is likely going to continue lower. However, when you're trading high margin, you got to just take that off. So how did I identify this, and how can you use this setup to identify reversals for your own trades going forward? You will likely not be surprised that it is the exact same pattern as the downtrend reversal. So in the downtrend reversal, we were looking to buy once the market cleared failed initiative selling. In this case, we have initiative buying right here. This is a buy spike up. We see a reaction to it. We see a move above that. And then when that clears underneath it, it becomes a sell level. Very basic, very straightforward. That's the trade. Buy here. And then I took off at the highest probability of support, which was right here. So I sold here, bought here, 15 points on 8 contracts in like a minute, 2 minutes. The market did continue, and you have range overshoot returns on macro swing highs like we just showed on as I zoomed out. You can also infer that the market possibly will go down to this failed initiative sell level. And then once that inverts, this is a problem area for sure. So anyways, I'm gonna keep this super brief. That's the trade setup. One more time, push above this initiative buy spike. The idea here is that there are trapped buyers. And so this is a sell entry off of that. And we have like a kind of shaky market. It's not sure where it's gonna go. And then we position against that. What I mean by a shaky market, not sure where it's gonna go, is we have this as a sell area, a very clear sell into that. This is the low of that sell area. Hence why we ended up taking off here. But once the market sells here and comes down and then makes a second new high here, it's assumed that this should be a buy area, or that the initiative sell areas should hold as well. I'll just move this up to the initiative sell area. This candle push here should have held right there. And we see that the market then goes underneath it. So it's two-sided at that point. Once we start going below that, you can just sell there, where this is a failed trend continuation. And we can assume that the market is going to go sideways at the very least here. Sometimes it just keeps going and this is the break. But when it does this pretend break higher, it then usually goes and searches for better support. And in this case, the better support was way down here. But it also could have been right here. It also could have been right here. And so all of those would have been good areas to take that off. You don't want to be someone who's sold down here getting trapped. You want to spot these reversals. Or someone who's bought up here getting trapped for that big old move, losing 200 points. You don't want to be that guy. So take your profits early sometimes when the market's two-sided. Another thing that I actually didn't mention here is, although we were moving off of this macro swing high, it's still a pretty straightforward uptrend. Like if we're using the delta levels, this is now a 1 minute chart, so we're on a slightly longer time frame. This is still an uptrend. We've cleared underneath this delta, possibly, but then this is a problem area, and the market overshot it and returned above it. So when you're trading in a slower sort of uptrend and you're trading and you're selling against it, you really want to be taking your profits early. And that has nothing to do with the fact that the market kept actually going. That's one of the biggest psychological hurdles in trading, is there's a chance of anything happening. And so this was the right, well, actually the real right decision would have been to sell, take some off here and then try to clear here. But if you made the correct decision and you didn't make as much money as possible, there's a negative reinforcement loop that happens. And we have to be very rigid and stay immune to that. Trade the system how you should trade the system, regardless of what happened in each individual trade. And then over the course of 20, 30, 500 trades, you'll start to realize where you should be trading and how you should be taking your profits. And the fact that this moved against a specific level doesn't imply that this was the wrong place to take this off. And then also, you know, as we're watching this happen right here, this is an entry right here. We have a totally different video. I could make a separate video about this. I'll just throw it into the tail end of this one. In this longer term uptrend, if it ever loads. So in this longer term uptrend, even though we are pushing against that macro high, we have delta bands, there's a whole value area congestion down here, et cetera, et cetera. The market's clearly moving above this failed sell. It's moving above this high here. So in that sort of longer term uptrend, if we go back down, so assuming there may be support here and the market's got buyers that are waiting to get in a better price and potential short traps, the invalidation of these initiative sell pushes is where you should be buying. That's the actual same exact reversal technical setup as this sell here. It's just in the other direction. And the video that I made on the best trading reversal strategy, it's the same sort of thing. And so you see that this comes up above this, and this would have been, as it pushes up, a good area to enter here. Again, two-sided market, have to be careful, take your profits somewhat early. Yes, it could rush through that, but this is a good area of opportunity, especially when you have these big old breaks. You can buy here and then sell up towards value. And that would have maybe filled that. And that would have been the fill on that. So if you would have bought here and sold there, you could have had another, only 20 points, but 20 points is kind of a lot of points if you're trading up there. So I hope this was helpful, a little bit simpler. It's just the same exact pattern as the other one. Repeatable trading strategies.